Yellow-faced lions. How are all my lion-hearted friends doing today? Give me a Y if you have your war face on. Let's have a great day. Turnaround Tuesday. Everyone doing all right? Thank you, Jacques, Anthony, Glenn, Ziggy Morrow. Oh, in your dreams. Yasser, Witt, Zia. There you go, buddy. There's the old lion roar. But now we're face. Okay. We're going to have Nick here today. There's a split going on. Hi, Jess. There's a split going on in Bitcoin. So Nick's going to address it. I just have a couple of quick comments here before I lateral it to Blake. The first NFL preseason game is this weekend. So yesterday, Blake needed a little more time to get ready to address the community. I drew this little wedge. I said, I think that Guppy's going to start heading up, show the 3 drive here. So if you took it, you should be out of half. You had 80, 90 pips. Trail your stop under 540, and I'd recommend being out of this before the BOE, and especially before the NFP if you took it. Give me a Y if you understand me. Thank you, Blake. So, you know, that's what I would do here. A couple of things that I see for today. I prefer the cable short over Euro, even though Euro's a little weaker here for a possible short because of mainly EG, okay? It's mainly because of Euro Pound. To me, it looks like Euro Pound has another thrust left to the upside. In fact, I think we're gonna get to Nick's original targets, which was, I think, 90.50 or so on the daily. Here's your weekly. So I don't think we're done there. And with that being said, if we still have another wave to the upside in Euro Pound up here, that makes the pound the preferred short. Okay, so here's the pound right here. Take a look at the 4-hour. So we had a little bit of an overthrow. It depends where you drew the wedge line. Some of them had drawn off this high. I took it off this high, and we're closing back inside the candle. I would consider this a scalp only. Stops over, say, about 32.80 or so in case we get one more pop up. And I'd look to book it and at least half of it before the BOE. I don't want to carry anything cable related into the BOE in case Carney, who you never know what he's going to do. So I'm not going to let him play Destiny with my pocketbook. I don't know about you guys, but I prefer this short over Euro. The RSI structure is weaker on the 4-hour. It's even weaker in the 1. And here's an example that on the 3rd drive, right? This is the 3rd drive here. But look, in the 3rd drive, you had 3 drives. So I've talked about sometimes on the 3rd drive formations, you get a fractal on the 3rd drive. This is pretty classic. 1, 2, 3. We're back inside the channel. You know, maybe you look for 160 first. Maybe by the BOE, we get something like this. But look at the divergence at the last high. Real nice glaring non-confirmation on this candle. So this is my preferred short going into maybe for a couple of days here, talking about the dollar being close to a turn. I'm not sure this is it. The RSI picture still isn't that great. I'd like to see some spiking action. Maybe it's going to happen on the NFP. I've seen a lot of dollar inflection points on the NFP, so my best guess is I'd love to see them take the dollar down into the NFP, maybe not such a hot number, and then look for a reversal. So that's my look in currencies. S&Ps are trying 78.6, rejected it, and grinding higher again. I still think it's worth a short with stops over the highs. You're only risking 6 handles from here, and see what happens into the NFP. But looking more and more likely like this was just another one of those plunge protection team trades, and they're going to grind it to new highs. But I think there's a possibility now that we're back under 78.6 that they just squeezed everyone who thought the top was here. You're going to know the S&Ps are starting to do something wrong with closes back under 70, 72. And that's my analysis for today. Hi, Glenn, how are you? And I'm going to lateral it over to Blake. How are you, my friend?
Good. Good. Yeah, you know, I'm really actually excited to have Nick here to talk about this Bitcoin situation, because I don't fully understand it, and I think I'm assuming I'm not the only person.
Most don't.
That don't really understand exactly what's happening. So I'm excited to get a clearer picture.
But you know, Blake, if you're over 40, most people don't.
Right.
I mean, it's almost like, you know, this is a new movement, okay, and the young people have caught on. I know Nick talks about the people she's mentoring on Facebook, her little group, that they're all young people.
Oh, I'm sure. You know, I'm sure it's a bunch of, yeah. I mean, it's like the new wave. I told you, I mentioned to you guys in our private chat, our Forex Analytics chat. I don't know if I told you guys. So my nephew, who is in college, and his buddy who is also in college. They both go to Arizona State University. They've been coming over here like the last couple of Fridays to kind of learn the markets, right? So they've been coming in, and you know they're learning about currencies and everything. And one of the first things that his buddy says to me, he goes, "Hey, what do you think about ETH or Ethereum?" And I'm like, well, you know, I gave him my thoughts. I'm like, so let me ask you a question. When did you hear about it, Ethereum? He goes, well, I heard about it 3 weeks ago. Now, this was literally the high. He heard about it like right here.
Yeah.
And I'm like, okay, so by the time you hear about Ethereum, you know, you hear about Ethereum.
It's gone up sixfold.
Yeah, you actually heard about it at the high price, and I go, it's you know, and I'm like, because what's happened is by the time that news reaches you, that's about what happened. You know, by the time it reaches you, it's old news, and so it has since then it had fallen, but. But I'll tell you, you know, looking at Bitcoin, and I'm going to let Nick, you know, really give her thoughts here. We're not too far off the all-time highs. And what's interesting is, I guess, you know, when I trade currencies, I look at correlations pretty strongly. You know, it's like, okay, well, you know, the Aussie's going higher. So what's a strong correlation there? Well, usually the Kiwi, and then, you know, the Canadian is a commodity currency, and blah, 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 blah. Okay, so when Ethereum is not following Bitcoin higher, I've got to think one of two things. You know, either there's something fundamentally going on with Bitcoin that you know, there's a reason why Bitcoin itself is going higher, or, you know, maybe the product, or in this case Ethereum, is it as valuable or as important as Bitcoin? And I don't know those answers, but I will tell you that Ethereum is underperforming Bitcoin, which I find very interesting. You know, because if I was buying Ethereum and, you know, thinking, okay, well, Bitcoin's been rallying, Ethereum's got to go up too, I'm probably a little worried why it hasn't. So anyway, just some food for thought. And like I said, I want Nick to really give her input here, not so much me. I'm just kind of a bystander, if you will. I do want to point out a few things. So we talked about the euro yesterday.
Almost went to your 1880, brother.
Yeah, we're almost there. Now we're showing a little bit of a reversal today, and I've already started selling the euro dollar. So I've already started. And you know, it has
hard to be perfect, Blake. You know, I mean, you know, I relate to you. You will always have a toe in the water, even if it's not at your ideal entry, because it doesn't always get to our ideal entries, does it?
No, I'm not perfect by any stretch of the means, and you know, and this is not a typical quote unquote Blake trade, or a this is more of
you know, setup and the ideas. And I sent this out. You know, I actually sent out my thoughts via ForexAnalytix yesterday. So I'm going to read them to you yesterday. This is my thought process from yesterday, and if you're a ForexAnalytix subscriber, you got this yesterday. I'm looking for a move to the spike lows of 2010, which comes in around 118.50. What's today's high? 118.45.
Yeah, you got to clean it up, man.
Yesterday's high was 118.47. Yeah, so I think the risk is above 119.50 or so, which is a confluence of fib levels at the 127% and 161% extension. A move above 120 could obviously be explosive. The thinking here is the last 2 years we have been in a range, and the move above 117 has squeezed the heck out of shorts. I think a turn is coming anytime in the next 24 hours with the DXY at DSI at 8. I think it's worth the risk this week. The data can improve throughout the week and cap the end of the strong week with a good NFP. The euro dollar could be back sub 115 levels in the next 1 to 2 weeks, I think. That was my analysis from yesterday, and this is where the chart was yesterday at 118.28. We're trading a little bit lower. This is not an easy trade. It's not even a really technical setup yet because we haven't reached any real technical levels. This is more of a thought process. Here's what I'm doing. Here's why I'm setting up this way. And some of them, you know, like I look at trades like this and it's like nothing really lines up perfectly technically, but it's still a trade that I've, you know, wanting to dip my toe in, and I've got only a 2/3 size position. I don't have like a full size position yet because I'm not sure. We got data coming out here momentarily, which you know, we have PCE today, we have ISM manufacturing data. So today's going to start off, you know, the plethora of U.S. data that we're getting this week. So I don't want to be fully in yet, not knowing the data that's coming out, because we might have some pretty important data that could really continue to weaken the dollar. And the dollar does not look good. I mean, if you look at you look at the cable, I mean, the pound's up at you know, it's trying to break that post-Brexit 38% retracement channel resistance. It's been capping us forever, and we're actually trying to make a move higher now. So I'm not completely convinced that the dollar's ready to reverse here. I'm not on board with that. So
a couple of things, Blake, that I brought up, I forgot to bring up, but you know, part of my reason, besides the technical things that I see for just a scalp to the downside, was confirmed by Grega's wave count on cable. And Nick had it right against major resistance. So, I mean, if we started getting above 250 or so, that would confirm the reversal, and we didn't do it. So, you know, this is how I use ForexAnalytix, and I think a lot of people should use it in a similar manner, is that if you have an idea, you can go to all the top minds and different methods and see what they're thinking, and if they're in alignment with some of the things you're thinking, it actually gives me more confidence on the trade.
Yeah. Well, that's the point, right? It's not necessarily to follow. Hold on one second.
Sure.
It's not necessarily, oh, I want to do exactly what Blake's doing or what Nick's doing or what Steve's doing. It's really to get a confirmation of what your thoughts are, and maybe give you something else to think about when you're in the markets. Hey, listen, I want to bring Nick in because I think today is such an important day for Bitcoin. But there is one question that Chris asked. He goes, hey, Blake, when you say 2/3 position, do you mean 2/3 of your usual risk percentage, I presume? And yeah, that's it. Because look, we're all different here, and you don't need to know the amount of money that I trade. I could tell you it's a substantial amount, and I take on very large amounts of risk. My P&L swings quite. You know, it would be enough to drive a normal person, you know, towards insanity, I would think.
But that's not necessarily how everybody else trades. You know, you might only have a $5,000 account, or maybe a $50,000 account, or maybe a $500 account. It's going to be different than if you were trading millions of dollars. So therefore, I have to tell you guys in fractions, you know, hey, I'm trading about half what I normally would trade, or 2/3, or a third, or a quarter, because if I give you a number, it doesn't necessarily translate correctly over to what you're trading. So like if I say, well, if I'm buying, $5 million worth of euro, you're like, oh Jesus, I only, usually trade $10,000 worth of euro. What the hell is that supposed to, that doesn't make any, that doesn't do anything for me. And so that's why I have to just say, hey, I'm only, if I normally trade 5 million euros, I might only be trading 2 million right now, because I'm not too comfortable with what I'm seeing here. So that's why I always talk in percentages, because it doesn't, like I said, it doesn't translate to the average investor all the time. So hold on, I'm going to cover up some. So hey, we want to bring in Nick. She's here, Dale, and okay. Nick, are you here?
Yeah, she's
Hello.
here.
Hi.
Hey, what's happening, Nick?
Hi, Nick.
Hey.
How are you? How are you, Diamond Girl?
Okay, exciting times, eh? Exciting times.
Good.
Very exciting.
Currencies and cryptocurrencies.
Yeah. So what is all this news that's coming out with Bitcoin today? It crept up on me like I didn't know until this weekend. I'm like, wait a second, what big day is happening, and what does that mean?
So, the hard fork. Well, it wasn't supposed to happen like this. So there's a problem with Bitcoin in that, the popularity. Since the start of the year, Bitcoin's gone from $700 to $2,000, $3,000. Okay, so it's really struggled to cope with it. It's struggling to cope with the number of transactions. A Bitcoin transactions are completed when another block is added to the blockchain, and at present the blocks are limited to 1 megabyte every 10 minutes, and so that limits the number of transactions you can do per second to about 7. And for example, Visa does 2,000 transactions per second, and so it means at peak times that Bitcoin transactions can be really slowed down. Like it can take a couple of hours for your transaction to go through, which inhibits the currency. So there's been a number of proposals for how to handle that. And there was a big one that everybody was working on called SegWit 2 times, which basically proposed to change how, first part was change how the data was transmitted, and segregated witness meant that the thing that oversaw how the transaction to prove it would be separated from the blockchain, and then the second part of this was in 3 months' time that they would increase that rule about 1 megabyte to 2 megabytes, and people would change it. Now, a lot of people weren't happy with this, and they thought that they weren't happy with it at all, and so what they came up with was a separate currency, splitting the currency into Bitcoin Cash, it's called, and Bitcoin Cash, the blocks would be 8 megabytes instead of 2, and so it's caused, it's all come very suddenly, and so what happens. There will be this is the first real hard fork for Bitcoin. Some other currencies have done hard forks. Ethereum did it, and Litecoin, I think. So yeah, it's going to be quite something. So what we're going to end up with is 2 kind of competing sort of Bitcoin currencies, and it might be that Bitcoin Cash doesn't get accepted. Not a lot of people aren't accepting it now. For example, Coinbase, which is the biggest exchange in the United States for people trading cryptocurrencies, are not accepting Bitcoin Cash. Now, I don't know what they're going to do with all the Bitcoin Cash that they get for the Bitcoins that they hold. Maybe they'll keep it and just not give it to their clients. And so what we've seen in Bitcoin is we've seen a proper short squeeze yesterday. So a lot of people shorted Bitcoin into the hard fork and got properly squeezed last night. Right here. What we saw was a bunch of people buying Bitcoin because they thought that moving their Bitcoin buying Bitcoin on exchanges that supported it or would give you the Bitcoin Cash 1-for-1. For example, I'm with a broker that will do that, so I'm going to get 1-for-1. And so I stayed in some Bitcoin, but I wouldn't recommend you do it with any leverage, which some brokers offer, because I think it could get quite sporty later, because it hasn't quite happened yet. The hard fork is later today.
So how unusual, Nick? You know, most splits, when people think of splits, they're stock splits, and the reason it's done is because the share gets too expensive for the average retail investor to buy. And you know, this is not cutting the price in half by doing it. It's just giving you a cash option. Is that correct?
Yeah, and you know, it's not like it's open source as well. So you know, they have Bitcoin. All Bitcoin transactions are managed by Bitcoin miners, and they are paid by, you know, earning Bitcoins for doing it. And so, you know, we don't know how many are going to adopt. At the moment, only one, I think, is supporting Bitcoin Cash, but some others have said they will if it proves to be profitable. Anyway, the split just happened. It happened at 1:20, which was a minute ago, our time, so 12:20 UTC. So now I'm going to go to my Coinigy account and I'm going to see what's going on with the price, because the Bitcoin Cash, which is supposed to be equal to Bitcoin, is trading at, you know, $300 or $400, and Bitcoin's trading at $2,720. So we're going to see what happens with these two. It's quite interesting.
Oh, they'll be arbing that.
That's really,
well, one of the things is there's very little arb, you know, in between these brokers. So I've seen like quite big price differences, especially in some of the others like Ethereum. Bitcoin's pretty tight, I have to say, on the pricing, but Ethereum between the brokers, you can see quite a lot of price differences. So yeah, it's quite sporty, eh?
Brave new world.
Brave new world.
Have you been doing any?
It has to do something to get better, but
Nick,
the thing is, the transaction time, these things, the transaction time, and you know, between the brokers is very difficult. A new exchange has just started, or a new platform called Coinigy, where at the moment, so I can use one platform to trade with more than one broker. I can connect my brokerage's accounts, but it's moving money between them is not inexpensive. It's costly and timely at the moment. It's like the Wild West of trading before people got together and made exchanges. So it's a brave new world.
Just meeting on the corner of Wall Street and Broad.
Exactly.
On the outside. Right.
Exactly.
Cool.
Wow.
So I hope I've explained that so people can understand. So, you know, we really don't know. Bitcoin Cash might not take off, but, you know, there's some pretty serious people behind it. And so, you know, so we have these two rival proposals for how to solve the problem of speeding up, you know, of Bitcoin being slow and costly. And so we'll see which one wins.
Hey, Nick.
Yeah.
So why has Ethereum been underperforming Bitcoin so bad? Do you know why?
I don't. I think you know, Ethereum got a little bit over. So many people came into the currency like so late, and I think it's been a correction, but just because it went so fast, the pullbacks feel like really, you know, end of the worldish, and they're not really. So and you know, Bitcoin, it's got name advantage. You can do a lot more with Bitcoin still than Ethereum. I think eventually, you know, Ethereum can handle a lot more transactions, and eventually, you know, will do really well. But you know, the technology is changing all the time, and there's so many, and you don't know, you know, you don't know which ones are going to win and which aren't. So
right. So like as an investor, all right. So say I'm like Joe Schmo investor, and I'm like, okay, I don't know much about cryptocurrency. Would it make sense for me as Joe Schmo investor, not knowing a whole lot, like just go with like what you know, like, okay, well, Bitcoin is like a, you know, it's like the gold standard, if you will, you know, and so you don't know if Ethereum is going to be around. You don't know if, you know, all these other different doggy coins and everything else is going to be around. So is it better just to be looking at Bitcoin versus all other, you know, derivatives of it?
Yeah, like, but you know, there's like, I don't know, there's 600 or 800 new coins. There's new ones all the time. I think the initial coin offerings are quite dodgy, and sometimes it pays to wait and see. But there's, you know, the applications for the technology. I think you either you know technical analysis and you apply some and you use a trading strategy, or you do a lot of research, you know, and it's all on the internet now, so you can do that. One or the other. Otherwise, I think you can, you know, because the price you buy at is important. So.
Yeah, absolutely, absolutely. I mean, I'm sitting here looking at Ethereum. I mean, if I was a buyer, you know, in the 300s because I thought it was breaking out over here, I mean, I'm down 1/3 of my investment. So I mean,
I have people in my group, yeah, who have been down more than that, yeah. So because they bought on leverage.
Not a margin call.
Because it's just available to people on leverage as well.
So guys, just so you know, so Nick, and you if you don't follow her on Twitter, is Nick Trades. She obviously is, she is obviously our you know, holy grail harmonic analyst. She does, you know, all of our harmonic analysis for our currencies, but you got a Facebook group that you also do a lot of moving average analysis.
Moving average strategy too, yeah, which is really handy for these crazy cryptos.
Yeah, so for those of you guys that don't or haven't seen it yet, you should actually check out her.
That's very nice of you, Blake. Thank you.
Well, you're welcome.
Isn't it fun, Nick? Isn't it fun to work with people that have a passion and an interest to learn?
It is. They're such lovely people, you know, and they're so enthusiastic and help each other. I actually really.
Yeah, it actually transfers, gives you energy, doesn't it?
Yeah. But you know, like I think the FX market's been exciting this month. This move in the dollar has really, you know, gone way beyond what people expected, and yeah, been quite something, hasn't it?
Yeah, it has been, and actually, you know, I feel a little awkward selling the euro right now, and I'm not sure if I'm not 100% sure if I'm gonna get run over like a freight train yet, because you know, how many times have you stood in front of like a big powerful move and like, oh, I'm gonna stop it here, and it just doesn't work. So that's why I'm like very apprehensive, and we got data coming out.
What did you always taught me? You told me that the dollar isn't it the SEK, the Swedish krona, that's your touchstone. Mine's the dollar Canadian. So if the dollar Canadian turns, I think the others will follow. Yours, I know, is the Swedish krona. So what's that telling you?
It's telling me that the dollar's still going to go down.
Oh no!
but no, I'm with you on the Canadian too, and the Canadian's actually trying to find some sort of base here, and so
it's trying, isn't it? We'll see.
It's attempting. Yeah, it is.
It'll be on the NFP, Blake. I've seen multiple inflection points.
Nobody's been busier than the Swiss National Bank, eh?
Who?
Yeah, right. I mean, the dollar Swiss has been actually outperforming as a dollar pair. Quite aggressively. Hey, we have durable goods orders coming out in just 2 minutes.
Yeah, I'll say goodbye.
Yeah, and I've got to get out of here too here in a moment.
Well, I'll be here for the whole webinar, so if anybody's got any questions later, I'll answer them once it's.
Well, I was wondering if you're around. I haven't heard.
Definitely, I'll be here for the whole show.
Yeah.
Okay. See you in a bit.
All right.
Thank you, Nick. Thank you, Blake.
All right, you're welcome, and I'm going to pass it back over to you, Dale.
Okay, is Steve here?
I don't know.
It's usually Steve. Okay,
Steve. There he is.
Okay, Steve, I know you didn't have a restful night. Do you want me to fill in, or you have some things you want to update the FACE community with? Up to you, bro.
No, we can definitely look at some things. I remember that we had some questions also yesterday.
What a warrior that Steve Volge is. Go ahead, buddy. So you could take the screen and tell us what you're seeing. You know, you were right about the pound. You know, you never got bearish on the pound. You said it was going to do this. It's done this. What are you thinking in here?
Let me take the screen.
You got it, buddy. You're in control. Like
Okay.
the TV series Outer Limits, I've given control of my television screen to Steve Volke.
So yes, the pound. Okay, since you mentioned it, we can start from that. You know, we were expecting 132.
Yeah.
From down here. I said
Yeah.
many times that you know, as long as this zone holds, we were saying before that as long as 28 holds, you know, you cannot be bearish. It held. Then
Right.
we breached above it. We said that as long as this zone holds, you know, there is absolutely no reason to be bearish. We also at this point indicated, you know, that potentially we have an ascending wedge here, which, you know, would bode well with another push towards 132. Now we got that. Now what happens from here? Listen, if in theory, which, you know, obviously this is not how things work, but if in theory, you know, the BOE wanted to be, because that will be, technically speaking, you know, a very nice breakdown from such a formation to start moving lower. But of course, you know, this is not how most of the times central bank decisions happen, because sometimes they do. For example, Wheeler, you know, was a trader, a currency trader, and you know, he knows how to use, you know, technical events. But in any case, you know, anything can happen, from an overthrow to the 161.8 that we see here, to an actual play out of the wedge. The only sure thing is that I would not be long up here, not anymore. And you know, I would be very careful, because if this resistance holds and we actually see a reversal on you know, on the BOE statement or whatever, given the technical position of the pair, I will tend to trust it. And you know, in this case, I will start aggressively looking for lower targets. Of course, you know, 130, 128 afterwards. Then we have, you know, this previous triangle resistance that, after broken, acted as support in this case. The 200 DMA is also at 126 at the moment. So, you know, we have a lot of downside levels to look at. But, you know, the trigger, as it seems at this current juncture, is going to be the BOE.
Is that Thursday, Steve, BOE, or tomorrow?
I think so. Let me have a look.
Because what I was thinking is people have money made long going into the BOE, that perhaps there'd at least be some type of profit taking into Thursday, if that's when the BOE is.
It is likely, but still you won't probably see a break, you know what I mean?
Yeah,
I mean,
until that's out of the way. Yeah.
Yes, you might see a pullback, there's no question about it. But you're not going to see, okay, here it is, it's on Thursday, yes.
Okay.
You were right.
Thank you,
as well. Yeah, so you might see some pullback because people might want to pair back some risk. So, you know, in this sense, being short from here might get you somewhat in the money until then, and then you can, you know, you can handle your position. Or on the other hand, you can wait to see how Thursday is going to go, because, you know, if we see an actual reversal, most probably it's going to have what we call some legs left in it. So, you know, it depends on how cautious you want to be, or if you're willing to jump the gun or whatever. I mean, I understand, you know, either way, as long as you know how to handle that type of trading. Okay. Another interesting pair is the yen. If you remember, we expected that we might have a breakdown from here. We did. We then expected that the main scenario would be, you know, a rebound from 112. Otherwise, what we had drawn here was that the pair would continue to find the triangle's support. We didn't get the first scenario, which was a rebound from 112. So that more or less confirmed to me that what we have here is a triangle. Now the question is what kind of a triangle we have, because this is one possible view of the triangle, but there is a second one, which is this. I mean, ignoring this wick and passing the trend line from everything else, which in essence then brings us the confluence of the triangle support and the 78.6, which is exactly the level from which we rebounded today.
Yeah.
Either way, even if this is the interpretation, okay, which the other one might be valid as well. Obviously, as I wrote yesterday as well, there is no risk. Yesterday, at the end of the day, I wrote that, listen, there is no risk reward to be short anymore, because the 78.6 is near, the triangle support is very near, and the triangle interpretation starts looking more likely to me. So as you understand, this needs caution, because this kind of a choppy trade and the ups and downs might even resume further. We might see, a rebound, a retest, a move lower. I mean, you don't know exactly how fast this price action is going to unfold, and when you're actually going to see some type of a break. So be very cautious here. I don't think that the technicals are offering good opportunities at the moment. I'll keep monitoring, and we see how we take it from there. The rebound today, though, I need to reiterate, is coming exactly from the 78.6, and depends on how you draw the triangle. It can also come from the support of the triangle. So be a little bit careful if you're short. I mean, if you were short up here, excellent. You had an amazing reward to risk ratio. You had an initial good target. You could have taken 50% at least. And this would probably be the place to offload even more of your shorts, if you're asking me. So that's it with the USD yen, because I know a lot of people are monitoring the pair. Now having to do with, let me have some, yesterday, by the way, yeah, we left some questions unanswered yesterday. I remember that one of them was the DAX. Okay, good thing that we're actually having a look at the DAX today, because it even gave us a rebound. What I had drawn since a long time ago was this this zone as a potential support. If you remember, we had actually seen this since days ago, that we might get a rebound and another push lower to reach that zone. Actually,
that was a great pattern in play by Blake.
Yes, it was.
It almost got exactly to the target, and it took 3 weeks. It took 3 weeks. So
yeah, it was a slow process. Yes.
Yeah, so sometimes you have to be patient, and no one could control how fast a market's going to move to a target, but
you're absolutely right.
Very patient trade by Blake on that.
The fact, though, that it was a slow process, and given the rebound we see today from this zone, makes me a little bit cautious, if you know what I mean.
You're constructively cautious.
I'm cautious for the simple reason that this index has been in an uptrend since the February 2016. We obviously saw some terminal formations up here, but we've now taken some time, and I see at least an ABC correction lower. We seem to be rebounding from a support area. This is also the 78.6. From this move, if we
you can't count 5 down, can you, off the high?
Yes.
Or can you? You got 5?
No, I'll tell you what I mean. I have 5. I can count 5 on C.
I see.
Okay. C, A, B, 1, 2, 3, 4, 5. You see it? Quite clearly. 1, 2, 3, 4, 5. So this could have been an ABC. And something, since we're talking about Elliott wave and the a short-term count, why don't we have a look of what Greg is seeing on the 4-hour chart for DAX to confirm this? You see?
Yeah.
That's the beauty, to be honest with. That's the beauty, to be honest with Elliott wave, is that it has rules. So it was easy for me to read on a daily chart what Grega was reading on the 4-hour chart. You see, it's a 1, 2, 3, 4, 5.
Exactly.
Yeah, and he's also expecting this to be an ABC. But remember, Grega has said it plenty of times. I've said the same. That's minimum expectations. Nobody can say that this won't prove to be a 1, 2, and this to be just the first leg of a third wave lower. But given the previous uptrend, you have to consider that this is going to be an ABC correction, like the big likelihood. I mean, the highest probability by far is that we're seeing a correction. And if this is indeed a correction, which is the highest probability by far, that tells us that this is a correction that's coming very close to an end. That also bodes well with Blake's attempt to short the Euro USD, because obviously the inverse correlation between them is pretty famous. Obviously, the DAX is not the one that drives the Euro USD having an inverse correlation. It's the exact opposite. To be honest, that's not fair. Both of them have an effect on each other, but I would say that the effect of the currency on the DAX is more than the DAX on the currency. Okay, to be absolutely fair. Okay, so Greg is seeing the same thing. He's seeing he sees an ABC correction, and that's what I see on the chart as well. So that's what I would say yesterday, and even more today, seeing this big rebound. I would tell you, be very, very cautious if you're short, and this is the place to at least offload a good chunk of your exposure. Okay, it's still very early. I mean, we just started having a rebound, so you still have time to do whatever you see fit to do according to what we see. Societe Generale just said a Euro USD overshoot to 120 is still in sight for the summer. A lot of banks are now trying to over themselves. The pair could go. This could really be the end of the trend, says Conrad. And Conrad, you know something? I would agree with you. It's the same banks, and I had mentioned that here a couple of months ago when we were having the discussion that I'm very constructive the Euro pairs. I said that one of the reasons I'm very, very happy being constructive the Euro pairs is that I've started seeing a lot of ridiculous analysis from the banks saying once again about below parity and some ridiculous level, etc. But I'm not convinced. Sorry, say again, Dale?
Now they've flipped.
Now they flipped. But are we, the question is, are we already, sorry, the word is already, are we already in a mature phase that the belief of a bigger rebound is widely accepted? I'm not so certain yet. I mean, I was very sure. I mean, I had the confidence, that doesn't mean I would be right, that we would not see prices below parity. I even had conversations on Twitter about it many months ago. I remember, a famous trader, etc., was running a poll about which is going to hit first parity, Euro USD or the cable. And I told him, why don't you put a question there, none of the two, because that's what I would vote for. And he's like, come on, it's a question, just answer. And I'm like, no, I can't answer because I think the question is incomplete. And, I think none of that is going to happen. And he says, okay, then don't vote. That was the conversation we had.
There is a question for Nick about Bitcoin options.
Yeah, I saw it. And Nick, are you still here, by the way? So you can answer that before we...
He's here.
Yeah, she seems to be here, but we're not sure if she's listening at the moment. So...
Okay.
Nick?
Yeah,
Okay, whatever. She's definitely going to be here in a while. We can tell her.
And the pullback in Kiwi you were looking for, Steve, the question is, do we hold here and still can generate another high, or definitely you talked about those resistance levels in Kiwi.
Yes, and they're playing out, but you know something, Dale?
You book it here.
I didn't even create a pattern in play here because I believed we were going to see at least a short-term pullback, but you know something? I don't have a technical basis. I think it's a little bit effed up, but my gut feeling tells me that we might have one more high. But this is purely a gut feeling. I mean,
this is a PG-13, Steve. Please.
I said
no vulgarity.
I said effed up. I didn't say.
Yeah, no, but it implies. I know what it implies.
Yeah.
I'm not stupid. I'm just kidding.
I know. So I don't know, Dale. I mean, I expected the pullback because we had both Aussie and the Kiwi on the resistances, one on the 161.8, which they tried to breach intraday twice now, the Aussie, and they failed. The Kiwi once at the 127.2, but my gut feeling still tells me that I definitely expect some type of a pullback. So, for example, I do expect at least something like this. Okay, at least. But I'm not sure if what we're going to see afterwards is this or one more drive to really run the bears, over once again and make them completely quit any effort to do it before we actually, see what's going to happen. So it's either this or the pullback we're seeing here and another high and then lower. But I'm a little bit conflicted in that. So, I don't want to take a position here. It's, either is okay. I can tell you one thing for sure though, and we mentioned that yesterday as well. Something is happening here with the Aussie again, that's for sure. Okay, because we are finally breaking below this. We have a potential double top. We even had an effort to retrace, to retest the channel here with the RBA, etc. This thing can pull back more than the Aussie USD, or actually this pair gives me more confidence that it might not have another low before a deeper correction. Another high before a deeper correction. So, at least that's how I technically see it here.
We're going to have Mr. Aussie in here Friday.
Really?
Yeah,
who's that?
Chris Laurie talks about Aussie yen as being his, risk on, risk off barometer.
It was a big carry trader in the mid 2005, 2004, 2007 time frame. Yeah. That was his big.
And I bet he made a killing.
Yeah, he did really well for his fund back then.
Makes sense. I mean, those were the times to go through carry trades, etc.
Yeah, and the question is, what are we entering that type of phase in the market, and what are the carry trade pairs? Because it's a whole new dynamic now. But I think it's Dale's going to be able to ask a lot of great questions about the carry trade phenomenon and what brings it back again.
First of all, to technically speak about the carry trade, at least in the traditional function of carry trade, the interest rate differentials we currently see between even the lowest yielding pairs, like the Swissy, for example, which is by far the lowest yielding one, and something like the Aussie or the Kiwi, are not traditionally considered anymore what we called back then the carry trade. I mean, you do get some positive carry, there's absolutely no question about it, but a lot less than what people wanted to have carry trades. The only way for you to find traditional carry trades nowadays is through emerging market currencies. Now, that's one point I wanted to make. The second point is the following. even if you want to go through something like that, I have to say something. There is the potential, because I want to show two weekly charts. One of them is the Kiwi yen, okay? Because everybody's saying like, okay, Kiwi yen might be a triple top, 1, 2, 3. On the daily, you can see it more clearly. On the other hand, I can tell you that we had a triangle, we've broken above it. Why not retest it and move higher? So there's a second interpretation. And even more, let's have a look at CAD yen.
Well, you know, the thing is I guess the question is, as central banks normalize, will Japan keep their ultra low policy in place over the coming years? And that's the carry trade may not be in a quote unquote traditional sense like you had mentioned, but 2 years from now, will we be back there where, you know, Japan's rates are at 0 and rates in, you know, Australia and New Zealand are at 6 or 7%.
I'll tell you, Blake, the only reason I doubt that is the following. Not that I doubt the craziness of the BOJ to keep 0 rates for as long as I'm alive and my kid is alive, but I seriously doubt, very seriously doubt, I mean, I give it less than 10 or 20% chance maximum that we won't have a global recession within the next 2 years, which means that what I doubt is that we will actually manage to see the rest of the central banks increase their rates and actually manage to hold them at some more elevated levels for more than, let's say, a year. Okay, let's say a year. Because until they go into the process, they hike a little bit, so it makes, you know, sense. Then I don't believe we're going to have more than a year before the global recession. We're already running, you know, a business cycle that is prolonged, extremely prolonged. It's, you know, it's record for at least decades. And can it get longer? Yes, it can. But how much longer? Not a lot. So will we actually have enough time to see more traditional currencies bring back, reinstate, even if the BOJ stays at 0, the carry trades? I'm very skeptical about that. I'm very skeptical. That's my worry, Blake, that, you know, for not seeing, you know, these currencies participate in, you know, in carry trades again. But we're going to see, you know, this is just an assessment. I'm just, you know, giving some macro view here. But the other currency I wanted to show on a weekly chart, because it's extremely, extremely interesting, is the CAD yen. Because the CAD yen displays two different elements here. One of them is the fact that we broke out of a descending channel after a long time, which on itself, and given the fact that we broke above it after a clearly impulsive move. I mean, look at this move. This move was 1, 2, 3, 4, 5, 6 consecutive weeks higher without a breather. We then dipped lower, retested the broken channel perfectly, and then we saw another impulsive move higher. But there is a second element here. Isn't this a clean inverted head and shoulders on a weekly chart?
Yes.
I mean, you don't, right? It is.
It is.
And
yeah.
And what would the target of this be?
Wow.
Let's have a look at it.
They're the highs.
I've already drawn it from what I see here. The target is 103. 103. I mean, this is thousands of pips higher, okay? This is 1.5K pips higher. So I would be very, very careful, especially with these two currency pairs, especially with the CAD yen. CAD yen at the moment is on the neckline. This move was impulsive. This move looks impulsive. And it seems very, very constructive to me. The channel got broken to the upside, retested perfectly, then thrusted higher. I mean, any technical interpretation I can give to this chart is constructive. Okay, so this also shows me that CAD might have a lot more strength left in it than people might think, even against the US dollars, because looking at all the yen pairs, still the one that shows more promise is the CAD yen. CAD Swiss, yes, we had a look at it last week, and we indeed said that this is a very interesting pair. Oh, yes, but where the hell did we draw the analysis? Okay, I'll find it.
Hopefully not in hell.
We'll find it. Doesn't really matter. I'll see where I drew it, but it doesn't matter because the bottom line here is that this is not a pretty, but it is also an inverted head and shoulders. And you know something?
Good or bad from here too, if this is a false breakout.
Yeah, you know something? This is also very nice. Why? Because one way or another, you can make a very good argument that this is a bottoming pattern anyhow. And this was a huge downtrend. We went from 111, almost 112, to 0.67 and change, 0.68, let's call it, okay? This is a huge downtrend. Even if this pair decides to retrace, just look at it. We haven't even retraced 23%, right? But this is a huge level, by the way. The 23.6, as you see, is a huge level. Why? Because it coincides, look at it. This is a very powerful horizontal zone. Look at this.
Yeah.
Very powerful.
Nice. Yeah.
So a break above this zone, in all honesty, I don't expect anything less than the 38.2, which is a lot higher. It's like 650 pips higher. Okay, so this is a very interesting pair. Now, having to do with the Swissy, I've had so many debates on Twitter about it. I have no clue why everybody is convinced. I honestly have no clue why everybody is convinced that the Euro Swiss is the product of S&B. I have no clue. I have no clue. And let me explain why I have no clue. Let me see if I have analysis on the weekly chart, because it's going to make it even more clear. Yeah, I do. Okay.
All right. Why don't you wrap it with that, Steve? Because Colin is in the house. And
sure.
Okay.
Was this move the product of the S&B from 168 to below parity? No, it wasn't. Actually, the S&B spent a lot of money trying to hold at least the 120 level, to hold it from breaking lower. What makes you think that this impulsive move higher is the product of the S&B? I mean, let me be clear. This was a move that was against what the S&B wanted. And why did it happen? Because we had safe haven flows when the financial crisis started, and especially those accelerated when the fears about the break of the Eurozone started coming into fruition with several incidents that we had. So now that these fears, in good reasons, are receding, what makes you think that this is not just people taking their money off a currency that costs you 0.7% to just hold it every year? So why not people just feeling safer about the Eurozone and removing their cash from the Swiss franc and doing something more productive with them, now that they're not afraid that they're going to have incidents like redenomination risk, etc., etc., etc. And I see a lot of people are still convinced here that this is the S&B. I personally believe that this is not the S&B, and if things don't go wild again with risk, soon I predict that this move might even accelerate higher. Just look at this technical break that we have here. And if you see on the daily chart, other technical breaks, which we mentioned since back then, have preceded this. So that's my view on the Euro Swiss. And that's why I'll repeat once again, you want to be short the Euro USD, I totally understand. You'd rather choose to be long the USD Swiss, in my opinion, okay? Because the Swissy is going to keep underperforming the Euro unless you see some big risk coming in for the Eurozone again. Thank you, Dale. We'll talk about the rest later. I mean,
okay,
tomorrow.
thank you, Steve. It's been great having Nick here today. Blake, thank you. Colin, I see you. I'm making you the presenter, and your mic will unmute.
Thanks,
and then
Steve.
Yes, mate.
Thank you,
thanks,
buddy.
Steve. Thanks, Dale.
Sorry. Yeah.
Thanks,
Thank
Blake, Nick. So waiting to hear your voice,
Dale,
Colin.
everyone.
And hi, Colin. Very nice to meet you.
Thank you. You too. It's great to meet you and everyone. Thanks for having me on today.
Oh, you're very welcome, Colin. So you're out of what location for CMC markets? They're global. Where are you?
I'm in CMC Markets Canada office located in Toronto.
Okay, sister city to my hometown, Chicago. And
Yes,
so
absolutely.
great to meet you. Yeah, great to meet you. And I always like to start with, before we get to some of the things you're looking at here, Colin, is how did you get into the
sorry,
industry?
you're breaking up, Dale.
How did you get into the industry? Can you tell us a little bit about the beginning of your journey? You ended up in a great spot as an analyst for a top broker bank. What was the beginning like for you, Colin?
Oh, absolutely. I'll go back from my family. My dad was an independent analyst for about 40 years, and he had, well, the first 15 years of his career, he worked for various brokerages in Canada, and then in the last 25 years, he was an independent analyst. And so I grew up around the markets. I grew up around analysts, and it's funny, I say I grew up around a bit of both sides of it. It's fundamentals and technicals. I grew up with seeing a financial analyst journal lying around. I also grew up seeing graphoscopes. So my background has always been kind of integrating both fundamental and technical analysts. I'm a chartered financial analyst and a chartered market technician. I started my career, interestingly enough, working in small capital finance, and as time moved on, I found that I was more interested in charting and in trading, and I gravitated over towards, I became a retail analyst working with retail brokers as well as trading desks, which involved as I moved away from finance into trading, that I got more and more involved in technicals as years went on. So I worked for Canaccord Capital, what's now Canaccord Genuity, for the better part about 11 years. I worked for them in a number of capacities, primarily as time went on. I started out as an analyst working with a retail broker. I moved up and eventually became their primary technical analyst. I also worked for a newsletter called The Morning Coffee that they publish, which focuses on daily action in news in individual stocks. Plus, I was publishing a daily newsletter on with technical picks as well. I was doing 2 Canadian and 2 US stocks a day. And
So you're
as I
breaking
moved
up
through the course of my career, I found that it was more. Oh, sorry. As I moved through my career, I found I was getting more and more interested in the bigger picture, and I was doing a lot of bottom-up work, but the top down also really intrigued me because you could see how the larger moves were having an impact, even on small and mid-cap stocks as you moved through a market cycle, and so I was, and of course being an avid follower of energy stocks and mining stocks and junior mining stocks. Clearly, the impact of commodity trading was also really important.
Yeah, you Canadians are hard asset. You Canadians are hard asset people. That's for sure. And how fortunate for you. And how fortunate for you, Colin, to have been mentored in a trading family, compared to what a lot of people have to go through searching the internet in a sea full of sharks and barracudas talking about unrealistic returns. You had a great foundation to launch your career from. You're very fortunate, 1 out of 1,000. And nowadays you can't even find a trading floor for a young person to go work and learn the business, because most of them are bowling alleys now. So you were very fortunate and blessed to come up in a trading family like this. So was your dad your biggest influence?
Absolutely.
Were there?
About it.
Go ahead.
Definitely,
So
there were others as well. I worked
books?
with a lot of very senior traders and senior brokers that that gave me a lot of advice over the years. And you're right, when I just as I was starting my career was the last couple of years where they had the trading floor in Canada, and then they closed it and moved everybody upstairs. And now it's not even at a lot of the brokers now. A lot of the professional traders, they can trade from home. A lot of them don't even come into the office anymore.
Yeah,
so
you know,
that whole
it was a golden
thing has changed.
Like, you know, I sound like a dinosaur. The good old days of open outcry, how I miss them. But you can relate a little bit. So were there any, once you started gravitating towards charts, I see you're using candlesticks, were there any of the famous technicians or any books, or did you have any mentors that you could recommend other people to follow that had a positive impression on you and steered you in the right direction for what kind of contingencies to look for in a chart?
I mean, I did a lot of my work was more general. So I took the Canadian Technical Analysis course that was written by. Yeah, pretty much. It was a lot of experience and flatly a lot of charting. One of the things I did growing up with my dad was we would do charting by hand of every single stock on the TSX plus the Dow, and we did that for years. I calculated in, because I'm old enough in the days before we had spreadsheets, that I've calculated moving averages for every stock for years, monthly moving averages. So yeah. I've got a lot of foundation in. I consider myself in some ways I'm the last of the old school. I'm one of the last people that actually grew up charting by hand, because even by the time I actually was old enough to enter the workforce, everybody was doing charting on computer.
Right. Yeah, I used commodity perspective for years, Colin. So I carried it around with coffee stains and ketchup and everything on it. So interesting. And just think about all the time you spent calculating everything by hand instead of having it by computer. But you know, NLP people believe that anything you write down, including keeping up a chart by hand, leaves a deeper impression, and you're more likely to recognize a critical area in the market if you do it by hand than just look at a computer screen. Do you agree with that?
I totally agree with that. Absolutely. And to this, I mean, because I'm looking at so many charts, I do it all on computer, but I always figure that my years of experience of doing it by hand, I can have the feel of it because I've done it. I can look at the screen. Okay, I know what that's like. But absolutely, for anyone starting out, being able to just do a bit of charting by hand and get used to it, because I always called it the organic feel of the market. And one thing that I haven't had time to do, but I know that the older brokers told me at the start of my career was they'd sit there and they'd spend the first 10 minutes of the trading day watching the ticker.
Right.
And just watching the ticker, and they say, well, watching the ticker is how I get a feel of what's happening in the market. And whether it's charting by hand or watching the ticker or things like that, there are some arts that have been lost in the art of the tape reader. Technological advantages. We've had a lot of gains, but we've lost some things along the way as well. Everything comes with a price. There's no free lunch in finance.
So we've talked a little bit about history. Now let's talk a little bit about mystery. We have BOV. You say that you're also a fundamental trader. So we've had a nice push up in cable this week. BOE meeting on Thursday. What are you telling your clients at CMC, your customers, about where the pound is heading and how they should trade it into the BOE, or if it's a stand aside until after?
Mm-hmm. Sure, just let me bring up my cable chart here. And so first, maybe I'll give a quick background on the CMC markets.
Okay. Nice screen.
I'm sorry I've lost you, Dale.
I like it. Okay, waiting for the cable chart. I'm here.
Okay, so the Table charts just coming up. I'll just give a quick background on CMC Market. So I've been with CMC Market Canada office for, it'll be 10 years in a couple of months, and so for CMC I cover primarily indices, commodities. Oh, thank you. I cover indices, commodities, and foreign exchange. We have a global team of 8 technical analysts. We have, in addition, I cover the North American time zone. We have 3 analysts in Europe, 2 in London. Our head office is in London. We also have a number of analysts in Australia, New Zealand, and Singapore that work with our Asia Pacific offices. So I do 2 notes a day. I publish 1 note in the morning that kind of covers the European morning and North American open, and then I do an afternoon note that covers the North American close and is our Asia Pacific morning preview. So I cover quite a bit.
Published on Market Pulse? Is that published on Market Pulse? Those comments?
No, it's not. Market Pulse is Oanda Corporation, which is one of our competitors.
I just saw it on your screen, and it was familiar to me. Okay.
So yes, I publish through. All
right.
Yes, so we have it on our available on our websites, as well as I post links on my Twitter feed as well.
Does CMC have any type of live social trading community where your clients can get together and go over the analysis of the work from CMC analysts and discuss what they're seeing, collaborate in any way? Does CMC have anything like that?
Yes, we do. It's built into our trading platform, and we do. We have a feature called Chart Forums where I can go in and I click on Chart Forum and I can type in it'll show my chart and an analysis from me, and then I can talk back and forth with our clients on it. Our clients can post their own charts as well. One thing I should note as we move into that is CMC is not in the United States. We are in we're in pretty much most of the other major English-speaking countries around the world, but we're not available in the United States. I thought I should mention that.
Who is?
In terms of our competitors, there are competitors that do operate in the United.
Yeah, basically in the United States, who is? There aren't many left. Oh, so that was.
I guess our main competitors in the United States would be Oanda and Forex.com.
Okay, yeah, they're the only ones left. So, okay, the baton aside from the baton death march of choice for Forex brokers in the U.S., what is on your radar screen? And is your belief that this turn in the euro is secular or cyclical? Is this just going to be one huge bear market rally that maybe even trades to 120? Or was the top that we saw in the Dixie at 104 near the end of the year the end of the bull market in the dollar, and now we're in a secular bear market in the dollar? There's big debate on that. Where do you come down?
I am thinking that we're getting into a bear market for the dollar, and the reason I say that is that I think you had at the end of last year, and really let's say through most of 2016, you had almost a perfect storm for the US dollar, particularly right at the end of the year. People were still worried about Europe and what was going to happen politically in Europe, and at the same time you had the Fed had been the first central bank to really take that hawkish swing, and while a number of other central banks were still sitting in pedal to the metal, full-on dovish stimulus, and so that really propelled the U.S. dollar upward. I think in the last few months you've seen that a lot of the political assumptions underlying the U.S. dollar move, that things were that Trump was going to be able to do everything he wanted fast, no opposition, no turmoil, and clearly that hasn't been the case. I mean, and I was saying even then, it's like, look, things are going to take a lot longer. Reform is always bumpy and rocky, and I think the streets kind of come around to that over time.
Give them credit.
Central bank.
Give them credit. He also wanted a weaker dollar. Give them credit. I'm sorry if I'm talking over you, but I want this to be I want this to be an interview, not a soliloquy. So
Absolutely.
looking at
that's a fair point. I mean, look, if he wants to boost U.S. trade, getting the dollar down, whether you talk it down or whether other things happen to do it, certainly absolutely would help the U.S. trade position and U.S. manufacturers. And so yeah, I think the U.S. dollar has probably peaked, and the world's kind of coming back around. You saw that the Bank of Canada raised interest rates last month. You were mentioning the Bank of England. Carney's coming under a lot more pressure to actually get up and do something, and in particular just to start raising interest rates in the UK as well, because they've got to start thinking about is inflation going to get away on them. So will
the Japanese ever join that chorus?
That's a really good question. I'd like to think so, but every time I look at the Japanese data, it's just a country that's still struggling. But I also have to sit there and ask myself, when are they going to run out of stuff to buy? They own I had seen some statistic that they're starting to own a ridiculously big chunk of Japanese stocks because they bought all the bonds they can buy and all the other assets they can buy, and they've gone into stocks. And it's sooner or later, you got to wonder. I mean, clearly, a central bank can't run out of money, but it looks like they're going to run out of stuff to purchase at some point, or they're going to end up owning the whole market.
Yeah,
right?
I mean,
I think that may be what ends up forcing it on them, rather than any kind of improvement in the economy. Because I keep looking, and their inflation doesn't move, and their economic data goes up and down, and it still seems to be struggling. Europe might be turning the corner finally, and the UK's been doing well has really been able to take advantage of the lower pound, but Japan is still struggling really out there. And really long term with their demographic issues, you've got to wonder, what is it going to take for them to get their economy going when you've got a shrinking population and no immigration?
Okay, well, being a Canadian, and most Canadians are, very interested in natural resources, and you talked about, that's something you were following. Who knows, maybe even traded on the Vancouver Exchange. That's still the wild, wild west. What's your take on oil, Colin? We've had a nice recovery from the $44 level up towards 50. Do you have a view that this was just another rally that may fail, or is there something else going on, and maybe some of the geo stuff happening in Venezuela, possibly the Middle East, surprises people with oil to the upside? Many still thinking, because every time they've tried to buy the market, all they've gotten is bear market rallies and lower lows, or the best they could say is we're range bound between that 45 and 55 level. You have a view on that?
Yeah, I still think we're range bound between 45 and 55, and you might even be able to spread that out to say 40 to 60, particularly if you're thinking Brent. But I think what you're looking at here with crude oil is one thing amazes me is collapsing and all the turmoil there, that oil isn't up more. And similarly, you've got these political risks in the Middle East, and nobody's really paying attention to that either. But what does intrigue me and makes me think that this upswing might be a little bit more sustainable this time is that the cap on oil has really been of this feeling that, and when we saw it earlier in the year, that the higher oil prices would bring shale production back on, and that any production that OPEC cuts back would be more than made up for by increased U.S. production. But then I sat there and started watching the earnings reports coming in last week, and it was really intriguing when you started hearing things like Halliburton saying oil field service and drilling demand is slowing. You had Anadarko and multiple other big oil companies actually cutting their CapEx budgets. And so when you start hearing that, you start thinking, well, gee, maybe that thesis out there, the idea, the notion that higher oil prices is going to lead to an explosion in shale production. Well, not necessarily the case at these price levels. It looks as though we're kind of hitting some kind of equilibrium, and at the same time we're starting to see the as much as we had the big ramp up in U.S. inventories, those are starting to come back down. Those are some pretty big drawdowns we saw in API and DOE last week, and for once they actually confirmed each other, which was good. And so it looks like perhaps this floor that we had around 42, maybe it's starting to move up to 45, and where we were trading 42 to 45, now we're trading 45 to 50. But the key thing is really, though, we're still range bound unless we can break 55. If we break 55, then something's clearing off to the races. But until then, we're still range bound, and flatly we're still in a trend of lower highs.
Right. So let me ask you this: you follow share prices and the underlying commodity. In this recent oil rally, oil shares, you said it because of earnings, et cetera, have way underperformed the commodity. Are you a believer that the stocks lead the underlying commodity, and because we've had underperformance in the oil shares, that could be a reason for this rally in crude to come off?
Yes, absolutely. I do think that energy shares lead the commodity price, and the reason I say that is because anytime you make an earnings forecast for an oil and gas company, you're bringing in two factors. One is production and one is price. So implicit within the price of energy stocks is a forecast of future oil prices. You have to have that to do any kind of a evaluation. So yes, and those are the kind of things we watch for. And now that we've had crude spike up here towards $50, and you're not getting confirmation from the stocks, you've got to wonder how much further upside you have. So I'll just note that the previous peak in crude was about 51.70. That was back in late May. This current high is another lower high around 50.30. So at the moment, you're still range bound. You've got to start taking out those previous highs if you're going to have any upside.
How about precious metals? How about precious metals, Colin? Gold shares haven't been acting as good as the gold either. So curious what you're thinking about that. Plus, silver's been outperforming gold late. Do you believe that will continue and the gold-silver ratio will not come in but start to move back out?
Sure, I'm just bringing something up.
And someone still wants to know your opinion on cable going into the BOE, someone in our community.
Oh, yeah, I'll definitely circle back on cable. So first of all here, I've put in the gold chart. Gold is, well, essentially it's kind of trending sideways between, let's call it about 12, okay, the bigger trend is 1,200 to, let's say, 1,300 is what we're kind of looking at here, and currently sitting just in the upper half of that at about 1265. We've had a nice bounce up off of 1205, good run in gold, and we're running into resistance here about 1270. That is the extension of a previously broken uptrend line. So if gold fails here to break out in the next few days over 1270, that would be trouble. That would suggest that we may have peaked in gold and are starting to roll over. For now, we're in a sideways trend, but it is looking a little bit vulnerable here. When I look at the silver chart, which is the pink line here on the left, what you're looking at is that, I mean, gold and silver generally have kind of the same direction of travel over the longer term. But in this case, since about April, silver has underperformed gold fairly significantly. So I think the recent outperformance in silver is more of a catch-up play at this point in time. But you're right about the gold earnings is interesting. Two things. One is that they're not responding to the gold's price, and the second thing is that they haven't responded to some really spectacular earnings that came through last week out of the gold companies. Things that people like Barrick were put up some and Goldcorp put up some really good numbers last week, and yet you didn't really get the follow through throughout the gold sector, and that usually says to me, and that's not just on gold. We're seeing that on a number of sectors. We've had a few stocks that have had big moves off earnings, like Boeing. But on the other hand, if you look at some of the other names, like let's talk to the tech names, and Apple reports tonight. But you've had tech names like Google and Facebook and well, Amazon missed, but Google and Facebook had good earnings and they didn't respond really either, and that's a concern of mine for the stock market in general, is that that breadth is decreasing. Not all the companies are responding favorably to the earnings reports, and that's a sign to me of a bull market that's nearing exhaustion, at least for the near term. I mean, I think you've got a longer term bull in place, but I'm still concerned that you could get a sizable seasonal correction over the next 2.5 months. How
much? 5 to 7?
Yeah, that's what I'm thinking. Maybe even 10.
Okay.
But 10 would be the outer limit. It's probably a 5 to 7.
And wrap with you and cable and maybe even the Canadian. since that's your home
Absolutely.
currency. Thank you, Kyle.
Absolutely. So cable has been looking very, very nice since the, I'm just going to try and bring my weekly chart up here. So we had the big collapse in cable, obviously, after the election and that huge head fake, which was crazy. But you've got a double bottom in place in cable now, and that was set right up at the beginning of the year, and since then you're basically been trending upwards. So I've got the Fibonacci retracements on here. You cleared the 127 was the first one. That was the 23%. Yesterday you broke out over the 38% retracement level, which was this 131.50. Plus you had this nice run up off 131. So you're clearing Fibonacci levels. You're clearing round numbers. You've cleared the 50 and the 200-day average. In May you had a golden cross. Your RSI is accelerating to the upside, and it's not overbought. So overall, things are looking pretty good for cable on the daily, and similarly, again, the RSI confirming nicely on the weekly chart as well. You're heading into the Bank of England here, and so the question is, what's going to happen there? I don't think they're going to raise rates this time around. They've also got the inflation report, so you'll probably see more of a reaction to the inflation report than the decision. You'll probably see two or three dissenters once again, but you probably wouldn't get too many people getting excited unless you saw more than 3 dissenters. Although there's only 9 people in the MPC, so if you started getting many more dissenters like that, you'd be getting a rate hike. So you'll probably see it hang around 2-3 dissenters is my guess. You probably see a bit of a retrenchment in cable after that, unless Carney talks hawkish. If Carney talks hawkish, then it could keep going. But overall, these gains are partly this shift towards at least neutrality and maybe getting more hawkish at the Bank of England. Inflation pressure is driven, but of course also the flip side of that is you're getting weakness in the US dollar. Now, talking about more hawkish central bank, do you want dollar CAD or CAD dollar, or it doesn't matter?
USD CAD's fine.
I'll do US dollar CAD to wrap up here.
Yeah, for retail.
Okay. So the loonie's been on a tear for the last 2 months, and we can see it in this chart here. Of course, this is the US dollar falling relative to the rallying loonie, and so what we're seeing here with this is that the Bank of Canada went hawkish. That peak in May and the downturn coincided with when the Bank of Canada members, Governor Paloz and his deputies, started saying, look, Canada had back in 2010, and when Carney was around, he had raised interest rates from 0.5% to 1%. Then when the oil price collapsed, Governor Paloz went from 1% down to 0.5%. And basically they said, well, the stimulus we brought in has run its course. The Canadian economy is now dealing with the lower oil price. That's all factored in. The economy is doing well. Inflation is picking up. It's time to start raising interest rates. So I'm figuring initially they'll take back the 2 cuts that they gave. So they've done 1 increase. They'll probably do 1 more between now and the end of the year. And the streets kind of has priced that in. So we have the Fed is raising interest rates. The Bank of Canada is now raising interest rates. Of course, the 1% on Bank of Canada would also bring it back up more or less in line with where the Fed is at currently. So you had this big plunge though now from 138 down to 125, and on the flip side, that's 80 cents on CAD US dollars. So that's a big round number psychological level, huge. And we're also, interestingly enough, we're also sitting at 80 cents on Aussie dollar right now too. So the two of them are at parity, which is also interesting. So I think what you're probably going to see, and you look down here at the RSI, you're extremely oversold. So my thinking is you're probably going to take a break here, and it'll pause with around 125. Maybe this bounces back up a little bit, maybe to 126, 126.40 in an upward correction. But I do see it staying below this kind of 128 for a while. It's still in a downtrend, but
there's some Elliott wave
counts. To see it go sideways.
Colin, there's some Elliott wave counts long term that would take it all the way down to 116. Could you see that being viable longer term? 116.
At that point, you'd probably need to see a rally in the oil price, getting it up above, something up above 60. It's possible over the longer term. I've always felt that there's a a happy medium for the Canadian dollar, where when it was up at par, it was great for consumers and all the companies complain. And when it's down under 70 cents, all the consumers are complaining and all the exporters are happy. And there is a sweet spot for the loonie. To me, it's somewhere between 80 and 90 cents on CAD US dollar, maybe even 80 to 85. So we're kind of getting into that now. So I mean, could you achieve that kind of an Elliott wave count? Sure, you could, but how sustainable that would be is another thing. But if you said 80 to 90 is call it 115 to 125 is a possible area where you could see it kind of settle in for the longer term.
Colin, I want to thank you so much for taking time out of your day to edify our community here at ForexAnalytix, and it was great meeting you and hearing your story, and thanks for sharing some views, and I wish you nothing but success, continued great career at CMC or wherever it is, and again, thank you for being with us today, Colin. Perhaps we could do this again down the road. The best way for people to follow you, Colin, is I have your Twitter handle is your name, plus you have a hyphen in there. Let's see, where are they here?
It's an underscore.
Yeah, you have an
at @CSazinski_CMC.
That's it. And people that want to follow you regularly can open an account if they're not from the U.S. and maybe a few other countries and follow your work. Go ahead.
Oh yes, and also we do make it available on our website as well, cmcmarkets.com.
Well,
and for Canada, it's cmcmarkets.ca.
Well, I'd like to call you my trading warrior brother. That's what I call people who give their time to come and talk to us, and we appreciate it, Colin. Good hunting into the BOE, and thanks again for being with us.
Thank you, and thanks so much for having me today. It was great to meet you and talk with you today.
Okay.
This was excellent. Thanks.
Okay, everyone, that's Colin Shazinski, and you can follow him at CMC. Thank you, Face. Have a great day. Enjoy your summer, and we'll be back tomorrow. Thank you, Jess. Thank you, Blake and Nick and Steve and Grega and Velu and the whole ForexAnalytix team. And before you leave the room, click that link covering 9 more pairs. More than anything, remember, don't just count your pips, crotch, count your blessings. See everyone tomorrow. Adios.